Hello everyone, welcome back to another tutorial video on Hyblock. In today's video, we'll be covering Hyblock's probability histogram tool. Before we begin, I think it's important to understand what exactly histograms are. So histograms are graphs that group historical data points into ranges or bins so that we can better understand and visualize the distribution of its values. Why would this be useful for trading? Traders often look at indicators and try to identify extreme or outlier situations. These can be key to finding good trading opportunities. The tool can be used to confirm or deny any assumption that an indicator value is an outlier. By viewing historical data points of the indicator in a histogram, one can identify if the current value truly stands out. In this video, I'll be going through how to read and interpret the results of the probability histogram tool. I want to start off by saying that this is not financial advice. Everything I say and show in this video is for educational purposes only. So to get started, on my screen you can see various different histogram charts. Each graph represents the probability distribution of the selected indicator relative to its historical values. The indicator can be selected from the top of the screen. We support various different indicators for this tool. Other parameters that you can change are the exchange, the ticker, the lookback period, as well as the ability to save the charts down for future reference. Moving to the results, on the bottom, on the title we have the ticker name, as well as the date range, which corresponds to the lookback period. On top of each of the graphs, we have the name of the indicator. So in this example, we're looking at global longs, top trader accounts, top trader positions, and open interest. Below the indicator name, we have some numerical values. The way to read this is by the following. So the probability that the indicator value is less than or equal to the current value, which is 72.56 in this example, is equal to 0.347%. That means that 0.347% of the time, the value has been equal or below the current value of 72.56. Or another way of looking at this is 99% of the time, the value has been above the current value. We can see similar results on the graph on the right, which is the top trader accounts. This graph is slightly skewed to the right, but similarly, 99% of the time, the value has been above the current value today, which is 72.84. Now, this may seem like an outlier, and it may be, but keep in mind, we are looking at data for one day. And based on your strategy, that might not be enough data points to make that assumption. If we look at a larger look back, we can maybe see if this outlier stays true. So from daily, we can switch it to quarterly and see how the results change. So we can see from the new results, when we have more data, these values don't stand out anymore. Okay. On the top, next to the probability, we also have the 24-hour delta. So this shows the change in the value from yesterday to today. Okay. If we hover over the graph, we can see some values that appear. So this tells you the range of the bin that you are selected on, as well as the number of occurrences within that bin. Okay. So most of the time, you'll see normal distributions, such as this graph here and this graph here. However, sometimes you will get an example of bimodal or even trimodal distributions. What this means is the values are distributed across different areas and rarely build up in the middle. Okay, we can see that in the open interest distribution, where we see a cluster of values over here, sorry for that, and a cluster of values over here, but not much in the middle. Okay, so understanding these different types of distributions is important and provides more context. So that was an overview of the probability histogram. I hope that provided more clarity on this tool. If you'd like more information, please visit our Academy page. Thanks for your time and see you in the next video. Cheers.